Let's do our highlight. It's Monday, the 20th, or August 19th. And we've got an interesting day, heavy volume, big range, but kind of a slow first couple hours. Now, one thing that you're going to see here is, let me play it. At around 10 o'clock, we're at 10 after 10 Central Time. A couple things that I'm going to walk you through. First, I want to get this a little closer. Let me pause it. Let's walk you through and put this list together. And what's the list is a couple things that when you notice, you understand the context you flow through. So what we noticed here was a big offer at 25 even, right? 25 evens in the S&Ps had a big offer. I think about 600 contracts were offered there. Second thing was what? We got to understand context. What do I mean by that? I'll show you in a second what the market was doing heading into there. Third thing you got to understand is tempo, right? I also use the word swipe. The market came up and swiped it. What does that mean? We'll talk about what that means or the why I thought the market could have some more legs to go up. But I'll walk through all of this because each one of these points are important. First, recognizing a big offer, and that those are sellers, understanding the context, understanding the speed at which they got taken out, and why that created the upside was the right side for a way to reverse if you were short, get long if you were bullish, or just understand that there was a lack of randomness either way. So I'm going to play this chart and replay through Sierra's replay the consolidation that the market had going up towards these 25 evens. All right, look in the upper right. You could see 24.75s are trading, but you also could see a couple other things. You could see we knew that 25 evens had a 600 lot next to it. So there was a resting offer at 25 even. So we know that, point one. Point two is context. There are two, now three tests or rotations to those 25 evens. The market comes up, comes down, comes up. That's how you watch that's how you understand rotations or a point and figure. That's the chart setting periodicity of my choice, of our choice here in the room, and in the whole edge community. So as this market's playing back, you could see it, test it 3 times, right? And it's got people who are short. There's always shorts and longs in the market, correct? So there's shorts from down here, from in here, and there's certainly shorts getting short in this consolidation range. And when you're short, when I'm short, when anyone's short, we are now buyers, correct? You hope to buy it lower because that's how you make money. You sell it here, buy it there, there's a profit. But either way, you're a buyer when you're short. You might have a buy stop above, you might have a limit buy below, whatever, but you are a buyer. So is everybody else. What do buyers look for? Let me draw this. I drew it before, people liked it. Buyers look for sellers. Period. Buyers have to find sellers at some point to get out of their trade, whether it's for a winner or a loser. So they're constantly looking for sellers, and these 25 evens up here have a lot of them, 600. So shorts might be saying, and this guy, for instance, is short, might be saying, if they start trading at 600 lot, I'll get out of this stupid short trade. All right, I found sellers, and I know I could get out there. But they need sellers to push the market lower, or if they're offering above, to just grab them and get out. It's what I was told was called years and years ago the lean. Shorts are leaning on those sellers. All right. So this is what this guy is looking for, and that is sellers. Well, he found them, and maybe he's leaning on those 25 evens. You could see it start to rotate back down. This was the third rotation, number 3. This was 2. This was 1. And so every time it goes to that price of 25 even, there's just a greater and greater chance that it's going to bust through it. Like if you're running through a door that's locked, every time you put your shoulder into it, the hinges might be getting loose more and more loose, correct? So now watch it. This is the fourth rotation up to this 25 even area. It's already been recognized with a big order sitting on it for the longest time. And wham, I just paused it. It just went through it that fast where it skipped, took out 662 with some speed, and quickly went 25 even bid, 25 half trade, all up in here. It's at that moment I said, this has got legs to continue up because, well, everything I just walked people through. And if you were short, time to get out now instead of buying 28s in the overnight high. If you're bullish, why aren't you in? But this is the analysis that you do if you're reviewing with someone or understanding why markets do what they do. And then there's no coincidence. If I were to play this back a little faster, let's go 5 times faster. There's no coincidence that it comes down here a few times and uses this area as subsequent support. Because that's where a lot of shorts are sitting there like this. Let me draw it again. Now the shorts looking for sellers, now they look like this. Their eyes crossed, dumbfounded, right? The sellers they were looking for are gone. What do you think they're going to do? Eventually, they're going to look like this. Not Frankenstein, but all scarred up. All right? And generally, what people do when they walk through a short trade that's a losing trade, whether it's a short or a long, and they don't get out, you know, they don't get out when they should. Maybe they buy the top tick or they don't, and it comes back, and they're like, oh, I'll get out this time. And they're bidding it right down in here. And that rotates back away from them. Okay. So they continue to try to play with this thing. And then maybe eventually it doesn't. But let's say eventually it's always against them. They don't get out. Wham. And it goes all the way down. And all of a sudden they got a little smile on their face because they made a little bit of money. But they still got the scars on their face because they didn't trade well. They let skill turn to hope. But that was the whole read, because that's what we're doing as traders. We're trying to read the market. And you can't find value for something unless you compare it to something else. So you have to find value. If there is a, I'm not going to use that example. You guys are getting me in trouble. There's no such thing as a good-looking person unless there's some ugly people. So you got to compare it to something else. When you've got context, you could compare it, to a pattern, to an order, something to find value. But there's no coincidence that this market, for sure, is using this area as subsequent support. It's coming in. I think it actually crept in down here and then finally released to make new or test the overnight highs. So hopefully that progression helps. Number one, recognition, maybe big orders in the book, buyers and sellers. Number two, understanding context when you go into there. Three, jump in and you see these guys buy up all those sellers. So it pisses off other people who need to buy it. And if there's a lot of pissed off buyers, price action, price probably going up and away. Keep that in mind. Don't forget, to find value, you need to compare it to something else, whether it's context or an ancillary market or some sort of flow. But again, this thing came down in here right where these guys probably are stuck. Go watch a baby bird video. That's a lot of baby birds sitting down in here. It's a lot of these guys that can't get out of trades. They look like this. And now they're scarred up. They're still short. And when they do get out, they'll either pay the high tick and lose a lot of money, or they'll hold on with all this emotional capital and it'll finally go back down their way and they'll say to their spouse, yeah, I traded okay today. Took a little heat, but made 3 ticks.